Good evening. Today, when I region Migan and Nishnabekwe, Megazade Odam, Mississauga of the Credit and Donjaba and Nishnabekwe and Dow. I just want to start our meeting with a smudge and recognition of babies, our lost souls that are being brought home, and to honor them for a minute. So as I take this, smudge ourselves off, clearing our minds so that we're going to meet together in good thought. We're on this platform, of course, because we don't have access to an in-person venue. So we're going to bring our AGM to you in this platform. But opening with the smudge, clearing our minds, opening our eyes, and hearing truth finally, as we give pause for our babies. Miigwech. My English name is Andrea King. I'm the chair of the MNCFN Community Trust. And we have online with us today, Marc Sevestre, who's our general manager, Wayne Wilson from Lincluden, our investment manager, and Marc Noble from Letko Brosseau. And I'll turn the agenda over to Marc Sevestre. Miigwech.
All right, miigwech, Andrea, and welcome to everybody joining us today. We are meeting virtually because unfortunately the COVID protocols haven't let us meet, and unfortunately we couldn't hold a meeting last year in 2019. So the information we'll be providing you today will cover 2019 and 2020. The agenda for today is the opening message from our chairperson, Andrea King, which was fantastic. Thank you very much. I'll be providing some update on the trust activities over the last 2 years. We'll be hearing from our investment managers, Marc Noble from Letko Brosseau and Wayne Wilson from Lincluden, about our portfolio and their views on how we've done and how we will be doing in the near future. Once they're done, I will go over some exciting news about some of the shareholder activism our trust has been involved with over the last couple of years. And this year, our trustee election will be held virtually as well, in line with how the chief and council elections will be run in December. And so we'll go through the process there for your information. And then I'll turn it over to Andrea at the end for some closing comments. So to begin, I'd just like to update the band members on the board as it currently sits. Andrea King, who you know and love as our chairperson. Dale Salt is our vice chairperson. Margaret Salt is our secretary treasurer. And amongst our 3 appointed trustees is Jennifer Bonham, member from the community as our youth representative, Elaine Lickers, a representative from the financial industry, and Jamie Lickers, a lawyer, represents the legal representation for on our board. We have 2 open positions, and I'll cover that a little bit later in the presentation. So to some of the great news that over the past 2 years, we've funded 6 projects in 2019, totaling $447,811. That includes the graduation awards, the annual donations and reimbursements fund. We funded the 2020 historical gathering, the major projects committee outreach in the traditional territory in Toronto. Their work, we provided funding for them to do that. And we've also provided funding for the band the First Nation to do more land claim research. So hopefully that will come to fruition at some point in the future. And in 2020, we again funded another 6 projects, the annual graduation awards, the donations, reimbursements again. Because COVID hit, We funded some emergency funding for the First Nation to provide food deliveries to the on reserve members and gift cards to those off the reserve. We also provided special student fund, COVID emergency funding, which helped our students who had technology issues in terms of upgrading computers or connecting to the internet because they were being asked to do their schooling online. We provided $248,000 to education to help with that. The Community Children's Center, the Dolly Parton Imagination Library Program. We funded that for our band members and their families for the children under 5. And we've also funded the project management portion of the expansion of the Lloyd S. King Elementary School. So the funding from 2020 was over $800,000, $808,340. So we've been fairly active since we've been funding projects since early 2001. We funded about just over $5 million worth of projects. In terms of our financials, in 2019, we had a very good year. The revenue from our investments was just over $1.9 million. We actually recovered taxes we paid to the U.S. Treasury when we get a dividend from an American company. There was tax withheld, but a few years ago we found out that we were eligible to be exempt from those taxes. So the moving forward part is we are exempt from paying taxes on U.S. dividends, and that we were able to recover 3 years of dividends that we had paid. That totaled about $140,000 we recovered over the last couple of years, and 95,000 of that was from 2019. The total community expenses from that year was $286,000, and that includes the expenses to operate the trust, which includes the funds we pay, the fees we pay for our investment management, foreign taxes, and all the office expenses that we would incur in a given year. Every year we also have to adjust for inflation. So the original $12.7 million of the funds for our trust was established. We have to keep that current with today's dollars. So the inflation adjustment in 2019 was $381,000. And therefore the net revenue, so that's the amount of money that we add to what we call our revenue fund, and that's the fund that we are allowed to use to fund our community projects. So we added $1.3 million to the fund in 2019. 2020 was a little different. Of course, COVID hit, but due to the great work of Marc and Wayne and their companies, we were still able to generate over $600,000 of revenue from our investments. Our total community trust expenses were $260,000, down a little bit from the year before because of the annual conference we go to for education and training. We weren't able to do, so everything went virtual, so we saved a little money there. And then the inflation number to transfer to our capital amount was $127,000. So the original 12.7 from 1997 is worth just over $18 million today. So we've adjusted for inflation on that. And then the net revenue we added to our revenue fund last year was $257,812. So where did that leave us? Well, at the end of December 31st, 2020, the revenue fund was $3.1 million. Because of some approvals, we had made the most recent value for our revenue fund is just over $2.8 million. So that's the money we have available to fund projects, as I mentioned. And if you're wondering how much the community trust is worth today, we are pre-recording this. So when you see this on July 15th, we'll probably have an updated figure. But at this point, as of the end of May 31st, we were at $25.8 million. And thanks to our managers, as of more recently, at the end of June, $26.1 million. So that's an incredible amount of growth since the original $12.7 million we started with. So on that note, what I will do is I will turn it over to Marc Noble of Letko Brosseau to provide you with an update on his portion of our portfolio.
Thanks very much, Marc. Hello, everyone, and my pleasure to be here to have an opportunity to update you on Letko Brosseau's management of our portion of the portfolio. We appreciate the trust that your community has given us in the management of these funds. So what I'm going to do very briefly is summarize performance to the end of May, and then also give you a sense of what our outlook is, not only for financial markets, but also for the portfolio that we're managing for you. So as you know, last year was recessionary times due to the onset of COVID and the enforced lockdown of economies, and we experienced negative economic growth. Suffice to say that we're quite constructive on the outlook for the next 2 years, where we're expecting very strong growth this year, and that will continue on into 2022 and beyond. So another way of looking at that is that we're in the early stages of an economic cycle, and it remains to be seen how long that cycle is going to go. One of the big contributors to economic growth has been the combination of both monetary and fiscal stimulus. In particular, fiscal stimulus. We've heard, of course, some very large numbers coming out of the United States in terms of fiscal stimulus down there. But when you add it all up, what you're looking at is about 36% of world GDP. So that's very significant. One could say also unprecedented. And that's going to have create some consequences in terms of financial markets that I'll mention in a moment. This gives you a sense of what's been going on in the United States with respect to the evolution of fiscal stimulus going all the way back to the Trump administration, and then more recently with the Biden administration. And as you're probably aware, as we're recording this today, there's discussion on a $1 trillion infrastructure package in the United States. This gives you a sense of how the markets have rebounded from the very dramatic sell-off that we saw in March, April of last year. It was historically unprecedented in terms of how quickly the market sold off, and rebounded quite quickly as well. Where our portfolios began to get traction in financial markets was following the announcements of the vaccines. That was in the Monday after the presidential election, November of last year. Pfizer announced that they had a vaccine that was ready to go, and stock markets rallied quite sharply, and in particular, value stocks, of which we are a practitioner of, and more specifically, those companies that are more tied to the economy, of which we've had a fair portion in our portfolio. As you're probably aware, savings rates are quite high, very much above what pre-pandemic levels were. This is going to be very supportive of consumer spending looking out over the next couple of years. Again, another element that will contribute to strong economic growth looking out over the next couple of years. In the following the sell-off in the stock markets in March of last year, central banks stepped up and lowered interest rates, as well as other extraordinary policies. Bond yields fell quite sharply, and we've seen quite a recovery with yields moving higher, prices going the other way since that point in time. We believe that the trajectory of interest rates over time here, bond yields, is going to be somewhat higher. We believe that there's inflationary concerns, and as well, with all of the issuance of government bonds at the margin, that should push yields somewhat higher. So our view is that interest rates do move higher. One could say that could have an impact on some of the very high valuation stocks in the stock market, none of which we own. So we think that this is a supportive element of better prospective performance from our portfolios. This particular chart here, I think, will give you a sense of how we view prospective returns on our portfolios. And I'll just kind of summarize it very quickly. What we're looking at here is earnings growth from our portfolio versus the markets over 2 years' time. And what you're seeing here is an earnings growth about 25% ahead of the market, but with the PE ratio, which is a fundamental valuation tool for stocks, at about 2/3 to 70% of what the overall market is trading at. So we have embedded conservative assumptions into these earnings growth expectations. So if we're close to right on this, with a tailwind of all this fiscal and monetary stimulus behind us, we think that the prospect for returns from this portfolio is looking good over the next couple of years. As Marc touched on earlier, the portfolio valuation, our portion of the portfolio is about $12 million as at June 25th. As at May 31st, we were just shy of 11.9 million. So here you're looking at the returns, and we took over management of this portfolio at the end of 2019. We got off to a bit of a sluggish start, and then COVID hit in the first quarter of 2020. And it's been since that the announcements of the vaccines, as I touched on earlier, we've had very nice performance. What you're looking at here is very strong returns here on a year-over-year basis. I would say that it's probably unlikely that we're going to see a 48.2% return from the equity market over the next 12 months. So that's really a strong rebound from the sell-off of last year. Not to say that we can't do well on a going forward basis, but I think that it's important to kind of temper expectations on what we can see on a going forward basis. Now, you can see the bond returns there doing much better than the bond market, in part because our bond portfolio is positioned we believe that rates are going to move higher, so therefore we have a lower sensitivity to that rise in rates going forward. Here we can see the year-to-date returns to the end of March, 12.7 versus 3.9. And again, all components have done well versus their respective benchmarks, which is, of course, what we want to see. And then if you look at the asset mix on page 16 here, what we see is that we have been favoring bonds over equities. Sorry, we've been favoring equities over bonds. And given that bias, and given the much stronger returns from equities, that has been a very important contributor to the returns that we saw earlier. I'll finish off here in kind of looking at the top 15 stocks of the portfolio. There's 128 stocks in the portfolio, and these 15 make up about 24% of the portfolio. So this gives you a sense of the level of diversification in the portfolio. Bank of America is the largest weighted position at 2%. And kind of continuing on that theme that I mentioned earlier in terms of the valuation characteristics here, the whole portfolio is trading at 13.5 times 2021 earnings, which is a nice discount vis-a-vis stock markets around the world. It's almost half of what the S&P 500 is trading at right now. Price to cash flow is also a very attractive 7 times, and we're looking at a dividend yield of 2.8%. So I can say that one of many of the contributors to the strong performance here have been stocks in the portfolio that have been more exposed to the real economy. These would be everything from lumber companies, mining companies, oil and gas companies. Today, they make up just over half of the portfolio. We have been trimming some of the stocks that have done well here more recently, but we do believe that there's still lots of runway left here in terms of the fact that we're early in an economic cycle. So with that, I'll turn it back to you, Marc. Thank you.
All right, thank you, Marc. I appreciate the update and all of your great work helping us out. So with that, I will turn it over to Wayne Wilson of Lincluden.
All right. Well, thanks very much for that and that thorough update on the economy and where the markets are from Marc. unlike Letko Brosseau, we've actually been working for the trust for quite a long period of time now. It's over a decade since I first darkened Marc's doorstep, I guess, and started working with you folks. And it's been a wonderful experience. So I'm very sorry that it's been a couple of years since we've been able to get together in person and meet all of you folks in your community center or your school. It depends on the year where we've met, and break bread and get to answer some questions from the crowd in an informal sense. But I guess say that working with Marc and Andrea and the rest of the trustees over the past decade, it's just been a pleasure for myself and for everybody at Lincluden who Marc and Andrea have via email and sometimes in person have met a good bunch of the group over the time period. Just give you a quick update on Lincluden. We're a boutique investment manager, and we like to get to know our clients extremely well if we can over time, but we also need to pay strong attention to the fact that Lincluden, like your community, is our community. And as a result of that, in terms of actions that we took to protect our capital, which is the people and the people who manage your portfolio and take care that the money is there every day, were kept safe at the beginning of this pandemic. As Marc indicated just before, I'd like to think of this period as it was the best of times and it was the worst of times over the last 2 years. When we last were about to meet a month or two from our normal meeting, equity markets were at all-time highs. The portfolio was putting up much higher asset ratings than it had in the past, and then a month later, not so much. As Marc indicated, markets sold off very quickly. In terms of what we did at that point is, as we saw the numbers starting to come out of Asia, a number of our partners, including myself, had been through the SARS epidemic in Toronto a decade before, and we moved into isolate teams before public health started to advise, and we've been in that situation ever since. So fully redundant teams to make sure that if there was any kind of infection that hit the Lincluden community, that the other half of the community could still function and take care of your assets on an ongoing basis. We are an essential business. We've been in that structure ever since, but of course, as the pandemic worsened, we've all been working in formats like this, and we have a Tuesday meeting, Zoom meeting, instead of our in-person meeting where we review every client. So tomorrow morning, I'll be updating the group on what we did for you folks here tonight. We manage just over $4.5 billion in assets, and the team, we're part of the Morguard enterprise, so they own 60% of Lincluden, and you might recognize them. They're one of Canada's largest real estate concerns, so you see their name occasionally on the top of buildings as you travel around the country. Everybody who can't be here today sends their regards to the folks. Their names are up there, and in terms of the Lincluden research platform, you can see a very deep and experienced team that manages your assets on a day-to-day basis. Wanted to talk a little bit about, the portfolio has been what I would say is in an extreme mode. There's been a lot of activity in your portfolio over the last years, and that has been in response to massive market gyrations. But we didn't, and largely through working with Marc and your community, we didn't take our eye off the ethical ball, if you will, in our investments over that time period. And Lincluden has included responsible investing in its investments for about 9 years now. It became an integral part of our process, and it's something that has been an ongoing discussion with Marc and your trustees. And through a back and forth, your community was able to agree on and establish some fundamental values that as investors you would like respected in Lincluden's funds. So I'll post them here. They would be on your website for the community as well. But that led us to, if you will, up the grade on your portfolio and start reporting, not just as Marc just finished on the financial situation of your portfolio, but how indeed your investments out in the world reflect the community's values at home. Okay, so that is something we encourage with all of our clients. And I will actually start with that part of the most recent report for your community. As you know from your own values, that climate change is a strong issue for the community and respecting the environment. So we now report carbon metrics to your trustees on a quarterly basis in your portfolio, and happy to report that your portfolio is less carbon intensive to the environment than the broad markets that we would be investing in on an ongoing basis. And one of the other areas that, as there are a number of values, we go through your portfolio. We don't make our own value judgments, it's your money, but we do have the capability to monitor your values through, just like we would the earnings of a company. We monitor the governance activities and their environmental activities and the social impacts that these companies are having. And we look through for areas that are of concern to your values, and we flag them back to the committee for discussion. And Marc, a little later, is going to go over some of the successes in engaging with these companies to change their behavior. But we work under the instruction of your trustees to engage with these companies on your behalf and make sure that they understand that some of their activities are not, up to snuff where we would like to see them going forward, and continually, if you will, lobby the managements of these companies for improvement, and also through discussion with your committee, if there is a company that might be a good financial investment but is a bad actor, and maybe there's usually good companies are good actors, but occasionally something will slip through and we would avoid a company on the basis of their activities if that didn't meet your values. Let's talk a little bit about the positioning. Like Marc, when times were good and markets were hitting all-time highs, we were scratching our heads a bit and we were wondering why they were hitting all-time highs. Things were looking a little pricey to us. But when the pandemic hit, that gave us an opportunity to go fully into equities, because we had been underweight as the pandemic hit and had higher cash, and we put that to work. That standing in, if you will, and implementing our discipline based on the valuations of companies at that time has worked very well. The portfolio is up March to March over 24%. So not, I guess the bottom was about the third week of March, but pretty much since the bottom, almost a straight line up through that period. And that's continued into the first quarter of this year with a 5.6% return. More importantly, the long-term return and the consistency of that line, which is the growth of $100 in your portfolio. This isn't the first time we've seen the markets in distress. You actually handed us the money to manage in October of what was then called the credit crisis, what I like to refer to as the bank fraud crisis, where we found out banks were being pretty nefarious around the world, and that a lot of the things they were selling to the market weren't what they were supposed to be. And Through that period, we managed to, on a compound basis in a conservative portfolio, provide just under an 8% compound return. And you can see that line, and this is one of the things we like to be able to point to at Lincluden, is that it's not jagged, it's not jumping up and down like the broad markets and some of the graphs that Marc showed you previously. And it's not consistently in every quarter up, but on an ongoing basis, it looks like you're climbing a hill at a nice, steady, consistent pace, and that allows your trustees over time to plan and to gift and to know that the money's going to be there the next month if they give some out this month. And that's really what we're trying to achieve with your portfolio and indeed a lot of portfolios like yours in the marketplace. What that looks like in terms of the market value when we took over the funds in October 31st, 2008. We were given about half of your assets at that time, which was 7.1 million to manage, and happy to report by the end of March this year, that had reached 13.7, and as of today, it's 14.4, I believe. We sent the statements to Marc so that the most up-to-date could go on your website. And over that time period, you withdrew $3.1 million for activities in the communities and fees to defray for the trust to make sure it's run in a very professional manner. Okay, so this shows you that straight line, if you will, on a quarterly basis. So you can see it's not always straight, and if you see that big dip down at COVID there, where they closed down the economy for a short period of time, but in general, if you look at it, it's been a nice climb, and as with Letko Brosseau, we think going forward over the next 2 years that we're going to continue to see that climb, that there's a growth phase in front of the market right now. In terms of the type of companies that we like to buy, we're looking for very high quality companies, but we don't like to pay a lot for them. Okay, so we spend a lot of time figuring out what we believe are the risks in the companies, and a lot of those ethical measures actually form part of our quality score that ranks from 1 to 10, 10 being the highest. And based on the quality score of the company, we can either buy it or not. If it's too low quality, if it's below a 5, we won't. And also based on the quality of the company, we will limit the amount of exposure we will put in your diversified portfolio. So it's a risk-adjusted kind of approach. The higher quality of the company, the more comfortable we are putting more of your assets there to achieve that consistent return over time. And we look for companies that have strong free cash flow, so that when something unforeseen like a pandemic comes along, with that, they're going to have the cash to survive and be there and come out the other end strong. We look for consistent and good dividends, because that is important for your portfolio and important for your yearly gifting, because as you saw in COVID, where we took a dip into a valley of that mountain climb, capital gains or increase in the value of the company doesn't occur every year, but the dividends do. Not quite like clockwork, but if you buy good companies, it's almost like clockwork, and that provides the consistent income to gift into the community and do the good works that the community needs the trust to do. And we do all that. We don't want to pay up, so we look for companies that the market has misunderstood and buy them below what we think the value of that quality company is. And we call that buying with a margin of safety. So if we get something wrong, we're not overpaying, and typically you don't get a lot of downside volatility in the price as a result. In terms of how we're positioned in your portfolio, it is a global company diversified around the world. It has a strong Canadian bias based on your investment policy, which your trustees work very hard on with the consulting community. So Canada is the largest, the US being the biggest stock market in the world by far. We find a lot of good quality companies there, and then a smattering of other companies from various markets around the world. We do build this portfolio from the company level up. So we're not really that concerned with what country they're in. We're concerned if they're good quality companies. And then we'll follow your investment policy from there and our own diversification guidelines to make sure we're never overexposing you to one currency in the world or to one sector in the world that could cause a lot of volatility in your portfolio over time. So you see on the left-hand side of the page that you're in virtually all of the industry sectors that are available within the world markets at the end of March, and that you have a diversified portfolio so that if any one sector experiences a problem, the other sectors should buoy the results in your portfolio if that occurs. So you do this because as much as you have high conviction in your companies, we're not always right. If we were, we'd probably be too rich to talk to anybody if we knew in advance what was going to happen in the markets. But we have really good ideas. And if you put a lot of those good ideas in there, most of them play out and you get that consistent performance that we showed you earlier in the presentation. In terms of the valuation of the portfolio, so all of those metrics at the bottom are very important to your trustees and to the consultants that they work with to make sure that we're sticking to our knitting. And really, as I said, we don't like to pay a lot for these companies. So we like to buy very good, strong, growing companies, but at a discount to what we think they're worth. And what this shows you on the left-hand side of that chart is that we're paying less for $1 of earnings in a company than the average in the market. We're paying less for the book value of that company. We're paying less for the sales that company generates. And a key one for us is we're paying a lot less for the cash flow that company generates, which we think is going to allow it to grow over time. And with all of that, we're still getting a strong dividend yield on the portfolio over and above the market to give you your gifting. Okay, and that's what we call this the Lincluden fingerprint, because there's never been a quarter where we haven't showed these results to your trustees that this is the discipline and we stick to it, and it works over time. In terms of a sampling of the companies that you might see in the portfolio, I said we like high quality companies. So most often when you look through the list that we provide to your trustees, you're going to recognize most of their names. The key thing, and once we find one that's great at a good price, it's likely going to be in there for a very long period of time if we've done our homework right on those companies. So the key thing for us is when you enter those companies, that you're not paying full price for them. And over time, the market recognizes what really is full value for those companies. And as that occurs over a long period of time, we'll sell it back to the market and take our profits and find the next one that fits our criteria.
Wayne, I wonder if we could, wrap it up soon.
Okay, sure.
Yeah, sorry to interrupt you, but.
Yeah, okay. So the fixed income portfolio, again, diversified into Canada's provincials and high quality corporations. Again, like the equity side, here's a smattering of the companies that you would see where you own the bonds of those companies and get an interest coupon on a monthly or quarterly or sometimes semi-annual basis. And that is the last chart. The rest of it is biographies of all of the folks at Lincluden. As we said, we're a boutique. We like you to see who's managing the money, and we won't spend any time on that, but they're there for everybody to look at. And as I said, we really want to get back out to the community and do this in person. And it looks like by next season, we'll be able to do that.
Thank you, Wayne. We certainly hope so. And having you and Marc out to the community, answering questions in person is always best, but we appreciate the hard work you've both done for us. And if I could get you to unshare your screen, there we go. And just get back to our, oops. here we go. And you know, because as I mentioned in the work that we had done, providing emergency funding during COVID to the community, it was a tribute to the work you've done that that those funds were there and were available to help the council and the community when it was needed. So, you know, a great, my hats off to you guys. And I know the trustees were really appreciative of you know, being in that situation to be able to assist. And I appreciate both of you indicating the companies that we own, because I think that was the important part of this exercise, is that having a portfolio means that, you know, we own companies, and being an active shareholder is something that Indigenous communities are now being made aware that they have this opportunity to do. So through a partnership between the National Aboriginal Trust Officers Association and the Shareholder Association for Research and Education, otherwise known as SHARE, we were able to create what's called the Reconciliation Responsible Investment Initiative. And part of that is a program called Values and Actions, where it's a network of investors. And in this case, we've created an opportunity for Indigenous investors to take part of that. And the MNCFN Community Trust was the first Indigenous trust fund to join this program. We've continued on with the program, and we are currently joined by trust funds from the Squamish First Nation, the Oliver First Nation, and the Chippewas of Nawash. And together we coordinate our activities in engaging the companies. So when you post those companies and the logos of those companies, we, if there's something they're doing that we want to have a discussion, help correct the behavior in our minds, in our views, because we've got money invested in those companies, we have the opportunity through this program to actively engage those companies. So in April 2020, we were informed by Marc Noble from Letko Brosseau that there was a shareholder proposal at Scotiabank, and it had to do with reporting on Indigenous and human rights in relation to their Scotiabank's commercial lending practices. And Harrington Investments was a company out of San Francisco who'd done research on the Dakota Access Pipeline company, the company that and wanted to find out who was financing that. And while they found that Scotiabank wasn't financing the companies that operated the pipeline, they found out that Scotiabank was financing a lot of the subcontractors to the pipeline. And so they wanted to ensure that any of the commercial lending that Scotiabank did, one of the factors that went into making the decision was if those companies would impact Indigenous and human rights. And so essentially we became a co-sponsor on that shareholder proposal and brought that forward in 2020. Unfortunately, it wasn't passed, but through the work I do with the Reconciliation Responsible Investment Initiative, I've been in regular contact with the corporate secretary of Scotiabank and the National Indigenous Banking Manager on still working towards that goal of seeing if we could get that implemented, you know, through our negotiations. We've signed on to many shareholder letters to companies, and one of the companies that Marc noted that is in our holdings is AT&T. We signed on onto a letter to make AT&T aware that we were very displeased with the fact that CNN has no Indigenous representation. The fact that one of its pundits, one of its contributors, was quite actively trying to erase Indigenous contribution to the establishment of the United States. In Rick Santorum, he was eventually fired. And when they posted the listing of the different ethnic groups voting in the last election, we were noted as something else. So we signed on to a letter to that to make sure that CNN was aware of that and do something about it. The other big highlight more recently in April of 2021 through the work of our Reconciliation Responsible Investment Initiative. The Atkinson Foundation brought forward a shareholder proposal to the TMX Group, which is a company that owns and operates the Toronto Stock Exchange, for reporting and a plan for Indigenous engagement, employment and advancement and procurement from Indigenous companies. And through our negotiations with them, they agreed to the proposal, where initially they did not and recommended to vote against that. But in the address to the board at the AGM, Colette Murphy, the CEO of the Atkinson Foundation, mentioned by name myself and the New Credit Community Trust as the reason they were bringing this forward, because they felt that allied investors such as ourselves represented what the company should be striving to do moving forward. So we were quite honored to be included in that historic event, and with the recommendation of the board to agree to it, the shareholders voted 98% in favor of the proposal. So that was a huge win. There are more engagements with other financial companies coming, but this is a great start. As I mentioned, I'm part of the Reconciliation Responsible Investment Initiative, and I'm also an advisory board member to a group called First Peoples Worldwide, which is out of the University of Colorado. And both of those organizations were in part responsible for the changes of the names of the Washington football team of the NFL and the new Edmonton Elks of the CFL. So the hashtag Not Your Mascot was something we have been actively working towards. So it's a very positive example of what we can do as shareholders. So what I'd like to highlight now for the band members is that this year we are holding our trustee elections. And this year we'll be holding them on an online virtual platform hosted by a company called One Feather. So our voting will be open from Monday, August 9th to Monday, August 23rd. What we would ask you to do is go visit the onefeather.ca/nations/MCFN to register. The nominations are open now and will be closing on August 2nd, 2021. And to process the nomination, what you'll need to do, if you're interested in becoming a trustee, email me at my email address, mncfncommunitytrust@on.aibn.com. It'll be available on our website as well. But include your name that you're interested in running, your band number, the name and email addresses of both, and the band number of both your nominator and your seconder. Again, this will all be on our website. To be eligible to run as a trustee, you must meet the following criteria. You must be a MCFN band member. You must be at least 30 years of age as of August 1st, 2021. You must hold an Ontario school diploma or equivalent, and at least 4 of the 5 trustees of the 5 positions we have available must live within the New Credit Reserve. And finally, within 30 days, if you are elected, you must be able to verify and prove all of that. So if I see your status card, proof of address, and a high school diploma, that will satisfy those criteria. We have to verify that you meet those criteria. So this year, well, normally in normal years when we meet in person, we generally have 1 or 2 trustee positions available because they're staggered. Every trustee position has a 3-year term, but because we weren't able to meet last year and we've had 2 resignations from our board, one resigned for personal reasons, and our former chair, Julie Form, had to resign because she was elected to council. So this year we have 5 positions available. So the positions that are currently held by Andrea and Margaret are naturally up this year. So that 3-year term will be served in full. So the person that the 2 that get the most highest votes on our online program or online voting, we'll get the 3-year terms. We have two 2-year terms, or 2 terms that have 2 years left in them. So the next 2 highest vote totals will get those terms. And we have 1 term that has 1 year left. And so the lowest of the most highest votes will get that term. So we'll coordinate it based on the number of votes provided. In the case where there's somebody who is an off-reserve candidate and they get one of the higher votes, then they'll get that vote slotted in where they fall. And then all other candidates who live off the reserves will then not be counted. So the voting process, as I mentioned, is through the onefeather.ca platform. So what we would ask you to do is visit the onefeather/nations/MCFN and register yourself to vote. We are coordinating with lands and membership department, and they are coordinating us on behalf of us and the chief and council elections that will be occurring this way in December. So this will be sort of a practice run for the community to get used to this process. So just visit that website, click the red button to get started. It'll walk you through that. And once you've registered your email and your name and it's been verified, you can click back on that website anytime between Monday, August 9th to Monday, August 23rd. And there will be a button that will tell you there's a vote available for you. And once that's it, you click that button, there'll be one question. It'll list the names of those who are nominated. You can click up to 5 choices. You could click 1 if you want. You could click 2 or 3 or 4, but up to 5. You can't click 6. So undertake that, and we will report back to you shortly after August 23rd to determine who the new board of trustees is. So if you have any questions, you can always check our website or email the community trust and for more information. So at this point, I will turn it over to our chair, Andrea King, for some closing comments. And I want to thank Wayne and Marc for joining us and all the work you've done for us. Andrea.
Thank you, Marc. Just to recap, yeah, so as noted at inception, the MNCM FN Community Trust, the fund, we received $12.7 million in settlement of Treaty 22. As we've continued to protect the capital, we have not only increased those funds to just over 26 million, but we also turned that and invested $5 million into community projects. And in the last year, we were able to, when in need, fund emergency projects, which was an amazing accomplishment for all of the trustees that were able to do that. That vision that we started, over 20 years ago, that we would be able to help when we needed, came to fruition, which was amazing. This growth is largely due to the diligent management of our general manager, Marc Sevestre, who has guided the community trustees through very difficult economic times over the last 2 decades of his service. So a huge chi-miigwech extended to Marc on behalf of all of our trustees for your diligent management. We appreciate you so much. Thank you so much to both Wayne and Marc from Lincluden and Letko Brosseau, respectively, for joining us every year and ensuring that all of our questions are answered. To that extent, if you have any questions or comments, please send them in to Marc, who will get them answered as efficiently as possible. We certainly hope that everyone is staying well, happy, healthy during our hopefully resurgence and enjoy some summertime. And we look forward to meeting everybody next year when we get to meet in person. In unity, everybody, chi-miigwech, bamapi.